Hi, everyone. Thanks for coming to the DeFi versus CeFi panel, the War of Ages for crypto. I'm moderating. I'm Camila Russo, the founder and CEO of The Defiant. The Defiant is the best source of information for DeFi and Web3 content. And we have Sidney Powell, the CEO of Maple Finance, Salman, Banaei, the head of policy at Uniswap, and Nathan Cha, marketing lead at dYdX. So just to start to set the stage, how do you guys define DeFi and CeFi? Like, what's the core aspect that makes each what it is? And yeah, maybe Nathan, you can start.
Sure. Good question. At a high level, I think the main difference between DeFi and CeFi comes down to custody of assets. So for CeFi, there's usually some sort of intermediary that actually holds custody of your funds. For DeFi, a major tenet of our industry is basically self-custody. So you get to control what happens with your funds. You can audit it in real time. Secondarily, I think DeFi really has to do more with empowerment of the users themselves. So the biggest difference between traditional finance and DeFi really comes down to the ability to audit everything in real time. So the actual tech stack itself, for example, with the dYdX smart contract, you can see exactly where your money is, what trades are happening in real time. And that's something that's fundamentally not possible with CeFi. So I'll hand it over to the other panelists to describe it more.
Yeah, I think the core difference is, as Nathan said, self-custody, but more than that, from a technology perspective, it's the use of smart contracts and a blockchain to actually operate the business. If you contrast like a centralized lending business, let's say, BlockFi or a Celsius, money went to a wallet address, but then everything behind that was controlled not using blockchain infrastructure. Effectively, it was a private ledger. If you contrast that with like DeFi lending, whether it's Aave, Compound, or Maple, you can see the movement of funds at all times, and it's always controlled using Solidity and using smart contracts.
Mm-hmm. I'll just add that one test for CeFi versus DeFi is a CeFi company, if they go down, their customers are in really bad trouble, whereas if a DeFi protocol, its developers walk away, like Satoshi Nakamoto, then the protocol continues.
Got it, yeah. Okay, so main differences are custody, use of smart contracts, and permissionlessness, censorship resistance. We have a very DeFi-heavy panel, so I'm going to have to play devil's advocate a little bit, though in my heart I will always be pining for DeFi. Is there an argument to be made that maybe in favor of CeFi, that CeFi will always have better UX. It'll always be able to abstract away all the frictions that DeFi inherently has, because it just puts a bigger burden on users to be responsible for their assets.
I could see people making the argument for CeFi holding a place because of that. So, lower latency, the UX, having somebody to call when things go wrong who could reverse a trade that you did. But I don't think that's persistent, because if you look at the inherent way that has to come about is you have to have people staffing it, manually making decisions. But as we can look at financial markets, we can see, well, that means that they can only really operate during banking opening hours. Whereas when you want things to be able to run 24/7, a blockchain makes a lot more sense, or a DeFi infrastructure makes more sense for that. Mm. Also, when you want to step outside the need to have somebody to correct things, then being able to do things like atomic settlement, which you can do on DeFi but not in CeFi, makes more sense. And so I think ultimately you'll find that DeFi actually ends up over the longer term being lower cost, faster and more efficient for people. It's just not readily apparent right now. Mm.
I think the value proposition of CeFi versus DeFi changes over time. So 5 years ago, when DeFi was the DeFi ecosystem was immature, it was really more of a niche way of trading and participating in the digital asset ecosystem. Over time, we're seeing both on-chain and off-chain tools developing to make it easier and more secure to engage with the decentralized ecosystem. There's many historical parallels. The one I like to use is, I'm probably one of the older people here, but I remember the time of like Prodigy and CompuServe, and that was the way that you accessed kind of electronic networks, and then over time, you access the internet through those portals. How many people are now CompuServe users? Those services at the time provided a more curated experience that kind of sifted through the chaos of what was then the internet. Over time, we saw protocols like the World Wide Web protocol make it easier to build user-friendly tools on top of the internet's backbone more directly.
Yeah.
Yeah, I think it is reasonable to say that there's a higher learning curve for DeFi compared to CeFi. I think self-custody of assets, understanding cold versus hot wallets, storage, all of those are things that people really haven't considered before when it comes to CeFi ecosystems. You kind of just deposit your money, buy some spot assets or whatever type of crypto you're trying to buy, and then you just kind of leave it there. But that being said, I think the best analogy for where we're at is if you compare it to brick and mortar banking. So back in the day, you had to physically go to a bank, deposit, withdraw your assets. Then slowly over time, we went to online banking. And then now you have mobile banking. So you can just open your phone, pick out how you want to withdraw your money, send your money. But each step along that process, as we continue to innovate, we had to educate users and older people who are used to brick and mortar banking, like how to actually go through these processes. I think DeFi is definitely in the earlier stages of that curve, but more and more people are starting to understand the value of self-custody and actually being able to audit where money is in real time. So obviously top of mind is FTX with the recent implosions, but we've seen lots of instances where CeFi institutions have basically failed the community and their users. Funds are disappearing, there's blatant fraud, and I think DeFi really is the only solution to fix these problems because you don't have to rely on specific actors or agents to do the responsible thing. Instead, you just rely on the code itself. And I don't have to trust some sort of centralized entity or individual person to not do shady things with my assets. Instead, I'm holding control over them the whole time.
Okay, so what I'm hearing is that while DeFi may be harder to use right now, it's because we're at the earlier stages of development of this industry. Over time, all of these frictions will be eventually removed, while at its core, DeFi offers value propositions that CeFi simply cannot, like 24/7 access to financial services, self-custody, the transparency that comes with having everything on chain. And so while it's harder to use right now, in the long term, it seems like DeFi should win out. Do you think DeFi and CeFi, are they friends or enemies or frenemies? Like, should they continue to develop in separate silos? And then if all of you guys are right, DeFi eventually wins over, CeFi disappears? Or is there a future where they are much more ingrained and working together? Like, should they take things from each other, or just continue to grow separately?
I mean, I think the role of CeFi has been to accelerate adoption of digital assets. So, but for the centralized exchanges, the ecosystem for DeFi took longer to develop, and so we would have had lower uptake of the digital asset economy. So I think CeFi plays, and these kind of curated walled garden experiences of new technology have their role early on in the adoption curve. As we move over time, though, and the features in the more decentralized ecosystem become richer, then we start to see less and less of a need to rely on CeFi intermediaries.
Yeah, I tend to agree. I think CeFi at the moment has bundled in all of these services. Over time, the trend is that each service is being separately unbundled and placed on chain by a new service provider or DeFi project or protocol. I think eventually what that coalesces to is that CeFi is kind of an on-ramp for people because it provides still this point of friction that people have to get through, which is they have to get from fiat dollars to stable coins or some other crypto asset to then be able to use these protocols, and they need a wallet to do so. Already you can see every major CeFi provider is kind of invested in its own wallet infrastructure so that they can remain relevant when people want to conduct most of their activity on chain with DeFi protocols. And the things that are points of friction there are KYC, being able to track funds, and so you're seeing now even that solution is moving on chain where you see KYC wrapped protocols, you see KYC wrapped walled gardens of multiple protocols, or you see a KYC wrapped asset like Keyring doing KYC wrapped ETH. And so even that service is now slowly moving away from a CeFi provider. And so if I'm a CeFi provider who was previously trying to build an exchange, an NFT exchange, a wallet, an earn program, you got to be kind of worried that those things are getting unbundled away from me.
Interesting.
I think these panels have been spot on in terms of CeFi's role for mass adoption. Realistically, if my grandparents wanted to buy Bitcoin, are they going to download MetaMask, figure out how to hold their own keys and all that? Probably not. But at the same time, I think the specific roles of CeFi versus DeFi should be differentiated. I think in a world where DeFi starts mandating KYC, doesn't allow for self-custody, then I think that we've dropped the ball completely. I think recently we've seen this difference play out very clearly too as a fix to all these implosions and these exchanges going under, like CeFi has come up with proof of reserves as the solution. But again, I think that that doesn't actually really solve the underlying issues that we're seeing with CeFi that DeFi uniquely solves. Proof of reserves only really tells you like a wallet address with a set number of like money in that wallet address. It doesn't tell you anything about company's balance sheet, outstanding loans, whereas DeFi, you can audit that in real time, like I mentioned before. So I think that obviously I'm bullish that DeFi overtakes CeFi, but I think for specific types of individuals who are trading, lending, staking, DeFi offers value propositions that CeFi never will. So that's why I see DeFi eventually overtaking CeFi.
So am I right to conclude that basically all of you guys think that eventually DeFi takes over?
Yeah. Well, I think Nathan raised an interesting point, which is his grandmother doesn't want to necessarily have a MetaMask wallet, but when he's his grandmother's age, is he going to want to have a different solution, or he'll probably want to use the MetaMask wallet? As in, he's not going to go backwards in technology as he gets older.
So even things like, KYC, AML, like going from fiat currency to crypto, you think DeFi will be able to solve all those issues on chain?
So one thing, and I'll make a quick plug here, you can actually onboard in a self-custody environment through the Uniswap app through our integration with MoonPay. So you can actually directly on-ramp into DeFi using Uniswap products. When it comes to the compliance challenges, we are seeing things like permission pooling becoming a more and more common option for example, regulated financial institutions. I think this CeFi has an advantage in the sense that their business model with clear control persons is reflected in kind of the regulatory infrastructure that we currently have. So it's an easier transition for CeFi to fit into securities or commodities or banking laws. The challenge for DeFi is that our business models, because of the reliance on open source protocols and this the reduced kind of control surface area, the regulatory system doesn't quite fit as cleanly. On the other hand, the CeFi business model right now involves a lot of vertical integration, which poses, unfortunately we've seen this risk over and over, self-dealing and conflicts of interest issues that are also incompatible with the traditional regulatory structures. So I think in the long term, as regulators get more comfortable with the DeFi environment, some of these concerns around AML and other regulatory obligations will start to dissipate as they realize that actually DeFi can help achieve the same objectives as traditional financial regulation, but just using different mechanisms. And the one example I like to use is when you look at seizure rates. So in the traditional financial system, according to FATF and others, we see about a 0.1% seizure rate of illicit funds across the economy. When it comes to a blockchain environment, it's about 27%. So that's 270 times more likely that an illicit actor's funds are going to get seized by law enforcement in a blockchain context versus a TradFi context. And as regulators start to realize the advantages of decentralized technology, I think we're going to see broader acceptance of new ways of doing things.
Super interesting. But right now, I mean, before we get to that future where regulators get more comfortable and everything is moving on chain, is there space to work with CeFi components, and are any of your teams working with CeFi? Or if not, like, how do you imagine they might?
I guess yes. I think that there's clearly differences in the tech stack, for example, in what we're actually building. But like, there's definitely more traditional institutions that are onboarding onto DeFi now, institutional funds and players. There's obviously different considerations for an institutional fund versus like a retail trader, for example. So an institutional fund is more likely to care about like AML, for example. So there's definitely a learning curve, and you have to, I think it's on exchanges and DeFi protocols to really meet them in the middle to figure out like, how do we actually address these concerns for you? But at the same time, I would say that the niches that we fill, like, I do think that there's a very big difference between what we're trying to build for a decentralized exchange versus a centralized exchange. So there's definitely a separation in terms of like, what we actually need to achieve versus a centralized exchange. So there's definitely an overlap, but I would say that there's definitely a separation at the same time.
What do you think is that difference?
I think fundamentally, like, what we offer to our clients is very different, right? So derivatives, for example. I mean, a centralized exchange might try to offer derivatives as well, but I think that at the end of the day, a centralized exchange with their KYC, how they actually conduct business is fundamentally different from a DeFi exchange. DeFi, for example, has a lot more community and governance, and DAOs actually participating in how business is conducted. I don't think that that's something that most centralized exchanges or any centralized exchanges really focus on at all. So again, there's definitely like fiat on-ramp partners that you might have at a decentralized exchange, or other components that might be more centralized in nature. But at the end of the day, like, there is a specific divide between DeFi and CeFi for a reason.
Mm-hmm. Right.
Yeah. I mean, somebody should stick up for CeFi. So, to Stillman, I think CeFi does an excellent job of being a concierge for institutions and for people who are not in crypto to gain familiarity to it. So, we're very open to working with CeFi providers, and we do work with CeFi providers. The way that Maple's structured is it's institutional lending. So when you have institutions who want to engage in credit, CeFi is a great sort of concierge or relationship intermediary for that. And I think in the short to medium term, they are going to be a great way for, whether it's TradFi or Wall Street, to start to get familiar with DeFi primitives in a way that they're comfortable with, that can be easily explained to them, and where they have, central relationship manager who can, correct things or set up their wallet infrastructure. Like, I think things like, Coinbase's wallet is really exciting to get access, to institutional asset managers and allow them to use DeFi. It offers security. It's through a party that they know already.
Mm-hmm. Right. And you had mentioned that Uniswap is working with MoonPay as kind of the CeFi, integration.
Yeah, so I think, we're starting to see kind of a CeFi as a service, emerging. Mm-hmm. On-ramps, on and off-ramp services, for example, with KYC functionality, being a more commoditized, unbundled, product that can be integrated into a DeFi ecosystem. And I think that regulatory mode is not going away. And so I think there's always going to be a role for CeFi. And having that role in the the ecosystem, provides a lot of opportunity to move up and downstream and in horizontal spaces. So, CeFi does have some advantages.
Yeah. So it looks like for like the lowest hanging fruit or the most obvious integration between DeFi and CeFi is with those on-ramps, with using Coinbase Wallet, using MoonPay, just making it easier for users to go from fiat to crypto to like non-custodial platform.
Yeah, so KYC is one moat. Another moat that we're seeing emerging is coming out of the SEC through their custody rule, where they are requiring the use of a qualified custodian to hold assets on behalf of registered investment advisors. And so that's going to compel more and more registered investment advisors that access this ecosystem to hold funds out of third-party custodian as opposed to a self-custody wallet. And so that's another type of moat that's going to provide a role for CeFi custodians. So
it would be a third-party custodian that's holding assets for other users? Like,
yeah. So it would. I think that could be bridged to the point where it could be like an MPC wallet where they just don't have sole control over it.
Yeah, I mean, you could have like a BNY come up with exactly that type of a wallet solution. Obviously, we think that's a bad idea because the whole purpose of the custody rule is to ensure that customer assets aren't being misused. Mm-hmm. And the fact that these assets are recorded on chain and available to the regulator, to the public, to the investors, obviates the need for this third-party custodian. With this SEC, unfortunately, I don't know if we're, as an industry, going to succeed on that point, but fingers crossed.
Yeah. And speaking of that, like a related way of integrating institutions and is what Maple is doing with kind of more permissioned DeFi, right? Like institutional lenders using Maple have to KYC, obviously, in order to use it. Borrowers, like businesses, using your platform as well. So to me, it looks a bit like a middle ground. Like you're doing KYC, you have this kind of permissioned layer to use a permissionless protocol. Curious to hear kind of opinions on whether this is outside of the scope of DeFi. Like I think like to maybe some hardcore advocates like this, this shouldn't be happening.
Some people would definitely say that. They would say that because it's not permissionless access and it's also that it's not entirely automated, that it's outside of DeFi. But coming back to early on in this talk, we defined what we thought DeFi was, and for me, I think it's the use of smart contract infrastructure and the public blockchain in order to manage the key components of your business. We're not just a wallet address that people send the money to and then we do whatever we want on the back end, or conduct lending business entirely on the back end. And so my view is that infrastructure should be turned to the needs of whatever client wants to use it. And if you're dealing with institutions, you do have this issue of KYC. We try and solve it in Maple's case by permissioning a pool. So it's like you can lend on the platform if we whitelist your address after you've gone through KYC. Other people are trying different ways of doing this, whether it's credentialing a wallet, permissioning an entire L2 is one conversation I had the other day. But I don't think that necessarily invalidates the ethos of DeFi, because I still think what we've built is more secure and more transparent because it's built on the DeFi infrastructure. It's just, I think, as I said when we last talked, Kemi, it's you got to kind of provide Coke or Diet Coke depending on what people want. You can't just provide one flavor of DeFi and say this fits everyone.
Mm-hmm. Oh, and by the way, you guys should check out the podcast we did with Sid recently on the Defiant. It's really interesting. Anyways, little plug there. So CeFi got really wrecked last year, obviously, with 3 Arrows, Celsius, BlockFi, and obviously FTX. How does CeFi come back from this? Like what lessons do you think were learned? Like what should be improved so that we avoid other failures like we saw last year?
I could go. I think you'll start to see more of a hybrid where CeFi is using more DeFi infrastructure or principles in how they operate, because the key issues were when people's backs were against the wall and they had the ability to kind of obfuscate things, they did. And part of that was driven by the market environment where, particularly for a lot of CeFi lenders, they had tons and tons of capital flowing into them. They had to pay a yield on it. They had to source the yield from somewhere. And so risk, management practices became more lax. Happens the same way in every credit cycle. But they had the ability to kind of obfuscate performance of their portfolios, who was borrowing what, because of their infrastructure. Whereas if they kept the same business model, but they used some DeFi infrastructure to add transparency, then I think they strengthen their business. And they need to do things like that, in my view, to come back. Like, it's very hard for them to set up similar levels of transparency to what people can now get in DeFi.
Yeah.
Yeah, I can, I'll just comment real quickly. So the data that we've seen, the on-chain data that we've seen, shows about the rate of increase of transfers from centralized exchanges to self-custody wallets increased by about 60% after FTX went down. And so it's a real thing that there's been a migration to the DeFi ecosystem. I think the way that the centralized exchanges can bring back confidence, to paraphrase somewhat, is they need to be more transparent with their customers. And that might involve either assurances from independent third parties, attesting to proof of reserves as well as proof of liabilities, and controls around self-dealing and that type of the types of abuses that we've seen in the last few years. And that can also be assured by regulators. So MiCA is laying out a framework that'll ensure that these centralized exchanges are subject to robust independent oversight.
Nice.
Yeah, I think we've seen CeFi try to respond, but in my opinion, most of these are just Band-Aid solutions. So there's definitely a call for increased transparency, which is why proof of reserves became like the new buzzword over the last few months, half year. But again, I think that if you really look at things over like a longer time horizon, FTX was just a symptom of an underlying issue. It wasn't the first exchange to see this type of implosion. KuCoin had an issue before. There's been other exchanges, other investors that have misused customer funds. And at the end of the day, I think that while CeFi will always have a role in the ecosystem, most of the solutions that are coming up with are just kind of Band-Aids like, oh, slap, like this is what we can do now for more transparency, but it's not part of the underlying infrastructure to solve the problem, right? As long as there's some sort of custodian holding on to assets, are you really in control of your funds? And the big buzzword phrase now in the crypto ecosystem is not your keys, not your coins. So if you don't actually hold your private wallet keys and you're not holding and self-custodying your assets, you don't actually own the assets in the first place. So again, definitely bullish on DeFi, probably biased, but I think that the reality is that the only way to actually fix these issues is through the DeFi ecosystem and the DeFi infrastructure we're building. So for example, right now, dYdX is basically a hybrid, like decentralized exchange. We have certain components that are centralized, like our order book is off-chain. But we're actually moving off of L2 Ethereum to become even more decentralized and building a standalone Cosmos blockchain instead. So in the future, what ends up happening is, from a tech standpoint, this is better, less latency, higher throughput, increased transparency. But what also happens is we become more decentralized as well. So as opposed to dYdX trading as a company making all the business decisions and figuring what to build, the community actually starts to operate the exchange, and we are just building open source software instead. So I think that that's definitely the direction that we're moving, but also in the ecosystem in general is that transparency is a really big component, and we have to continue to innovate and build more infrastructure that actually allows for this transparency and is intimately tied to what is actually part of the product experience, as opposed to just, oh, here's a wallet address, or here's one aspect of what we're providing that's clear to users, but everything is transparent, everything is auditable in real time.
And an interesting counterfactual, though, is that like if the exchanges all go and create their own chains or layer 2s, then they kind of start to become DeFi, like implicitly. You can see, Binance has Binance Smart Chain, Coinbase has Base, dYdX now has its own chain as well. So, there's kind of convergence there.
Yeah, we're seeing kind of that transition on chain that you all have been calling for. Is there an argument for CeFi to just become TradFi? Like, why should CeFi be regulated? And maybe this is for Salman. Like, why should it be regulated any differently than a bank? Like, should a centralized exchange simply register as an exchange? Should a CeFi lender get a banking license? Because we've seen otherwise, like, there's shady things start to happen if the right kind of guardrails aren't.
I think it depends on the type of regulation. So if it's as an example, if it's the omnibus account where customer funds are held, there's a lot of good traditional financial regulation around auditing and segregation of funds and things of that sort to protect users from abuses. And that can be copied and pasted from TradFi regulations to a CeFi context. An area where I think policymakers need to maybe adopt a more innovative approach is when a CeFi exchange or custodian is leveraging blockchain technology. A lot of these regulations were written for opaque centralized ledgers, not open permissionless ledgers that are fully viewable by anybody with internet access. And so the regulations need to kind of incorporate this new paradigm when it comes to ledgers of record.
Okay, interesting. And then to start wrapping up, we have a few minutes left. Just looking 10 years from now, like if everything goes right, what do DeFi and CeFi look like in the future, in an ideal world?
I think a lot of financial services will continue to move onto DeFi infrastructure. If you look ahead 10 years, maybe not over 2 years, but I think over 10 years, and that's because the rate at which the technology is improving will take it to a point where it kind of exceeds what's possible in sort of CeFi or TradFi sense. Like if you look at the core systems at most large banks today were written and created 40 plus years ago, and there's no rate of improvement on those systems. So it's like you just hit a point at which they can't really function anymore. There's not enough engineers who know Cobalt to go and code up those systems. And so I think 10 years out, you should see more kind of partnership between CeFi and DeFi. Like you still need these kind of on-ramps, these intermediaries to help get people in the door. But most of the actual heavy lifting in terms of transactions and products should reside on-chain in DeFi. Mm-hmm.
Yeah, I think CeFi's role is not going to change nearly as much as DeFi's role. And as we see kind of the integration of a financial protocol for the internet and decentralized projects across technology, commerce, and finance, DeFi kind of becomes the backbone for a new economy, while CeFi kind of continues to play that kind of on-ramp role into this much richer DeFi-based environment.
Right.
Yeah, I agree. Sidney touched on this already, but I think the rate of innovation within the DeFi ecosystem has been growing exponentially over the last few years. If you compare where we are from an infrastructure standpoint and tech stack standpoint from 5 years ago versus today, it's apples and oranges. Mm-hmm. So I think the rate of innovation continues to grow exponentially over the next 10 years. So maybe not like next year, but 10 years from now, we can start seeing a lot more mass adoption of DeFi in general. I still think CeFi will maybe play a bigger role in terms of like mass adoption probably for older consumers. So like if Bitcoin or Ethereum become part of like retirement portfolios, so people want to add them to their 401k. Obviously those tend to be like custodial, so that would be CeFi's role, or potentially for like on-ramping into crypto and figuring out how to like dip your toes in for the first time. But I think savvy investors, institutional funds, they will all start to adopt DeFi more and more, and we've already started to see this transition after FTX, and that'll just continue to grow over time, and it'll just compound. So as people become more savvy and understand, oh, how do I actually audit everything on chain? How do I actually trade these types of derivatives that I want to trade? Or how do I participate in a staking and lending environment? This will just continue to roll, and as younger participants continue to roll into the ecosystem, we continue to see DeFi growing and growing in size.
Yeah, one area where I think we will see CeFi growth, like exponential growth, is in the tokenization economy. So to bring real-world assets onto the blockchain requires some kind of CeFi, CeFi entity. And so as tokenization becomes more attractive, tokenization of real-world assets becomes more attractive, we can see a vibrant industry around CeFi institutions taking these real-world assets and putting them on chain.
Interesting. Okay, so I think everyone agrees that more and more financial services, assets, users will migrate on chain in the future. The role of CeFi will continue to be as an on-ramp and as a way of tokenizing real-world assets. So very quick, we have 2 minutes left. What do you, like, if you can name one thing that still needs to be built or that you want to see developed further for this to happen quickly, for more of financial services to be brought on chain? What's that one thing that needs to happen?
I think from like a UI user experience standpoint, there's definitely some criticisms of DeFi that are quite reasonable. So latency being an issue, higher gas fees, for example. I think that we're still seeing a lot of this innovation happen right now, which is why it's starting to compete a bit more. But I still think from like a tech standpoint, we have to continue innovating and continue to build. We're not at the point yet where from like a technological standpoint, I think DeFi has really like dug its toes in and built something that even the average Joe user would be like, oh, this is really easy to understand.
Yeah.
And that's what I want to see more of in DeFi, but also I'm very bullish that we'll be able to achieve over the next few years.
So I'm the policy guy on the panel, so I have to say, good regulation is better than no regulation, and no regulation is better than bad regulation. And so I think what we need is good regulation that focuses on the real risks as opposed to non-conformity with traditional financial market infrastructure regulation.
Fair enough.
More stablecoin on-ramps and just more stablecoins in circulation. Like, it needs to be sort of 10x the size. I think when that happens, you have, when we go from like 130 billion to 1.3 trillion, you have all these emergent properties, and you just have a much more sustainable ecosystem in terms of traffic and fee revenue for all the startups trying to participate. So I think that's what needs to happen.
Awesome. Super interesting. Thank you so much to the panelists. I thought you guys would play nicer and be like, no, CeFi and DeFi will be friends, but everyone's like, no, DeFi is going to win.
I tried to still, madam.
I mean, well, yeah, there's obviously ways to integrate both to bring in the masses. So, yeah, thanks. And thanks, everyone, for joining us.